All right, well, with the Nasdaq setting a new record today, we thought it'd be a good time to take a look at the market technicals. The chart master, Carter Braxton Worth, joins us now to dive into the charts. Carter, what are you looking at?
Sure, let's go around the horn and look at some major averages or indices and where they are now in relation to their former highs of late 2021, early 2022. Let's put up the first table. So all three of these, well known, of course, S&P 500, the Dow, and the Nasdaq Composite are all above their former highs. So 2 years later, S&P up 6.6, industrials up 5.7, and as you just mentioned, the Nasdaq Composite making a slight new high. Now then, of course, we have those that haven't quite recouped all their losses. So the S&P 500 equal weight is not quite back to unch. The mid-cap index, not quite back to unch, but close. The Russell 2000 nowhere near being close to having recouped its loss. And then the oldest index of all, interesting, the Dow Jones Transportation Average is still down 13+% from its former all-time high. So let's look at a chart or two of some of these, and we can go from there. But the question is, do we chase the winners, right, or do we maybe play the laggards? So here's the S&P. Again, you're up 6%, but you'll note this: the S&P consolidated for 1 full month, actually 5 weeks, before it broke out, right? It got to the former high, consolidated, and then exceeded the high. Now let's look at the next, and you'll see that the equal weight has just now returned to that level, and the presumption is that it too, as the S&P did, will back and fill at a minimum, meaning before you exceed a high, typically you contend with it. Look at the Nasdaq Composite as well, and you'll see the same circumstance. So were these two that are catching up to the S&P do what the S&P did, one can anticipate backing and filling or backing away before going higher. And then finally, relative performance is everything. So let's look at a ratio chart. This is the Nasdaq Composite divided by the S&P, which gives you a relative strength line. And what we know is the Nasdaq Composite's relative performance peaked in 2021 and still way, way behind the S&P. And then finally, of course, the Nasdaq Composite overall, its relative performance, the Nasdaq 100, is making new 20 and 30-year lows as we speak.
That's a very interesting chart, Carter. I want to pose a question to you that I posed to the folks here on the desk tonight, and that is, if you had to put fresh money to work today, where would it go? Would it go in the so-called winners, the Mag 5, or however many you want to call it, or semis, or would you go to the sectors that show signs of life now and are catching up, like a biotech, a healthcare, a retail, et cetera?
Sure. I mean, I think it really gets down to large versus small cap to some extent. And so I would answer it by saying I would rather have an overweight in a Russell 2000 IWM than an SPY. But I also like the energy theme that you all were batting around on the desk. I think that that's a good play here.